All right. Terrific. I think we're in action here, getting everybody loaded up, which is great. Um, Lauren, I believe you might say a few things as we're getting started, kind of getting everybody, fired up and motivated for today's rather unique session.
Yes, thank you, Nathaniel. And
My
welcome,
pleasure.
everybody. Good morning. On behalf of the Tampa Sales and Marketing Council, we just want to welcome you to this webinar. I want to thank our leadership team with our Sales and Marketing Council board, especially Nathaniel Bittman and Todd Reffling and Suzanne Dresser, who helped curate this program today. Also, Dr. Robin Lavich joining us. She has been with us in the past. And Susan Heffron with Zonda. So thank you, team. I will throw it over to you, Nathaniel, to get us going.
Well, thank you so much, Lauren, and I appreciate everybody in attendance today. I'd like to, as we talk about today's information, this should be very unique. It's going to be recorded, so for those of you that are members, you'll have access to this content. First and foremost, I really want to thank our sponsors, and I'd like to thank our gold sponsors, and we would not be able to do some of these things if it wasn't for our sponsors. So thank you to our sponsors here at the Sales and Marketing Council SMC Board. I'd like to thank Mattamy Homes, LMCU, and Lennar. I'd like to also recognize our silver sponsors. That'll be Homes by West Bay, Casa Fresca Homes, Park Square Homes, Toll Brothers, Brookfield Properties, Pulte Group, and Gray Street Studios. And of course, thank you as well to our bronze sponsors, and that's Meritage Homes, MI Homes, and Inland Homes. Today's session is going to be very interesting. I want to thank the two panelists that are on here today. I'm going to begin by just sort of introducing Dr. Robin Lavich. Dr. Robin Lavich is the owner of Surpass Your Goals. I have been mentored, and I have also a behavioral scientist person myself. Robin's been my coach and mentor for going well into almost 20 years now. And I'm excited for Robin to be able to bring a very unique perspective as we kind of evaluate economic data. Many of you might already know Susan with Zonda. Susan Heffron is the vice president. Mrs. Heffron is based out of Charlotte, North Carolina, almost 25 years in real estate experience. Mrs. Heffron oversees and directs our research on a variety of project types throughout the Southeast, managing a staff of analysts and consultants that support research throughout the East and Southeast portion of the United States. Ms. Heffron's experience is extensive. Her primary focus is at Zonda, is related to residential projects, including sales and the purpose of building communities, as well as providing expertise and analysis related to entitlements of residential, commercial, industrial, and hospitality-related projects as well, too. So today's goal, what is today's goal? What are all of you in sales looking to get out of today? So we know that we kind of have a fast-paced housing environment out there. Sales professionals are navigating through a very unique environment, dealing in the subjects of volatility, uncertainty, complexity, and a bit of an ambiguous environment. With that, we like to think about economic data, what drives consumers. So economic data like inflation trends, interest rate changes, and consumer confidence really do drive consumer behavior. We hear that in the news, we hear that in social media. Now, the key is how do we interpret this content? And the objective is Dr. Lavich is going to come in after Susan presents some of this economic data and certain related fields that are important to you as model center individuals. Robin's going to bring a behavioral science spin to it and with this really powerful tool by creating an understanding on how people process uncertainty, make decisions, and respond to perceived risk. So the goal of today is to kind of blend the economic insight by creating a perspective on how do you in construction sales, how do you react to some of these market trends, and not necessarily only react to it, but how do you lead through it? So with no further ado, I'll begin by turning over to Dr. Robin Lavich, who's going to present us with our initial concept known as VUCA.
Thank you. I'm just going to do a quick screen share. So I don't know if anybody has heard the term VUCA. It actually became pretty popular in the midst of COVID, and it's an acronym. So we're going to talk about how to thrive in a VUCA world. Y'all can see my slides, yeah? Okay. So VUCA is an acronym that stands for volatility, uncertainty, complexity, and ambiguity, which describes everything that is currently going on in the market condition. So volatility has to do with rapid changes That obviously, just a couple examples, fluctuations with material costs, changes in interest rate. Uncertainty has to do with all of the unknowns, and the impact for you all is buyers start pausing due to economic concerns and market unpredictability. Complexity has to do with all of the different factors. It's very multifaceted. So there's regulatory shifts, there's many interconnected variables, makes it very difficult for people to make sense out of things. And then ambiguity has to do, oh, typo, ambiguity has to do with a lack of clarity. So buyers are unsure of what they want or need, which then causes a delay in decisions. So that's the model in terms of VUCA. If you can think about that in terms of how you're interpreting some of the data that Susan is going to go through, what we're going to do is end up plugging how do you manage that when that's having such a big impact personally for yourselves as well as for your buyers, and then how to navigate out of that so that you become what's called VUCA ready. Now I'll turn it to you.
Thank you. All right, Susan, you're on. We'll come back to VUCA and then some other strategies as relate and wrap it up during the end. Susan, you're muted.
I knew I would do that. Thank you all for having me today. I really appreciate the opportunity. As was mentioned, I am with Zonda, and we do market research and track the building cycle from entitlements all the way through closings of homes. We are the sole provider of that data across the entire life cycle. So today we're going to really talk about the greater Tampa, Sarasota area as illustrated here on this map. And we're going to go through the sort of builder sentiment survey that Zonda does nationwide. We're going to look at how that relates to the Tampa market. And then we're going to see what the actual hard data is. We're going to look at the soft data and the hard data. So when we look at the soft data across our builder confidence survey, builder confidence is shifting. Nearly 40% of builders surveyed nationwide reported that demand is slower than expected, but is causing concern. Now, this is up from the beginning of the year when most of our respondents said, yeah, demand is slower, is on track, but it's not really causing concern. In Florida, specifically, this is a very similar trend that we're seeing. About 40% of respondents said that demand is on track, and another 40% said it's actually slower and it is causing concern. But 60% of respondents said we're less confident in the market right now than we were at the beginning of the year. Comments included things like demand is pent up, but it's picking up pace and it's slowly releasing. Traffic's picked up, but we've had to offer more incentives. Or it's really tough out there. We'll talk a little bit about how this relates to the hard data as well. So right now in the greater Tampa market, active projects are up in the first quarter, declined about 6.7% since the fourth quarter of 2024. So just in 3 months, we had a decline in projects of about 6.7%. If we look at it year over year, attached townhome products are down almost 14%. And those communities are down almost 30% since 2019, which is what we consider our normal year here at Zonda. Our single family detached projects are also down considerably, about 6% year over year, and more than 30% since 2019. So there are less projects available, and that's due partly to entitlement constraints and governmental regulations. But what are we doing with those projects? Well, in those projects, sales are down nearly 30% in March. Single family attached sales, whether that be townhomes or condos, are down 30%, while detached homes are down 35%. This is about 500 homes compared to March 2024, and only about 200 homes less than 2019. Now, by county, if we look at the different counties, sales are down in every county except Manatee. In Manatee County, month over month, sales are up almost by 50 homes. However, the annual count is down about 31 homes. Where are we seeing upticks in sales? Well, those upticks in sales are seen in the attached product. Builders are really embracing this not only as a way to combat affordability constraints, but also because buyers are tired of sitting on the sidelines and they're willing to consider a new product type, whether that be attached villas, duplexes, townhomes, or condominiums. Across the market, townhome sales are up about 27%, representing about 27% of the market, excuse me. Prior to COVID, it was less than 20. So as we talked, the counties are responding to lower sales than our normal year of 2019 in most cases, but we are seeing some positive notes. These bright spots include Hillsborough County, which has increased sales 2%. So growth in Hillsborough County is great to see. Hernando has also experienced growth, even though it is a smaller market. And then we also see Sarasota and Pasco counties have sales declining over that peak year. So we need to watch those markets in terms of sales. As we mentioned, projects are down, project count is down, but on a project basis, homes are actually selling at a comparable pace to 2020. We're selling about 2 homes per project per month through March, definitely following the seasonality that we've seen over the past decade, where sales sort of tick up in March, decline again in April, and then start fluctuating throughout the summer months. So being on this side of things and having previously been on the builder side of things, one of the things I like to watch is starts and closings. So we want to make sure that we're not starting too many homes, so that we want to track starts and closings in the market. But what does this tie in with builder sentiment? So even with the concern over the state of the market, if you recall, 40% said that is causing concern. Builders are overwhelmingly continuing to start homes at a pace equal or greater to that in 2024. This is about 70% expect to increase sales in Florida. This is slightly lower than the 81% of those that appear to track higher sales numbers or starts numbers, excuse me, through 2024 nationwide. What are we seeing in the local market with that?
So let me just pause for a moment. I just want to make sure I'm clarifying this because this is an interesting dichotomy. So we have cause and concern at about 40%. Yet what we're seeing is based on the data, housing starts are higher. I mean, they're up there. They're not, housing starts aren't regressing backwards. In other words, builder sentiment isn't, we have cause and concern, so we're going to stop building. Is that kind of what the data is showing us at this point?
So yes, we're still building. And part of that is, we'll talk about it a little bit later, some of those economic hard data points, because we do still have continued population growth. We do still have continued household formation in the market, and these folks need places to live.
And does that kind of relate to traffic? As we see the traffic is picking up, but consumers aren't necessarily making a decision.
One of the things we're definitely hearing from our clients and when we go out and talk with on-site sales agents is that traffic is increasing or traffic is steady, but traffic is very slow to convert to a sale. It's taking a little bit more care. It's taking a little bit more hand-holding. It's taking a little bit more time, especially when we talk about older buyers or maybe all cash buyers that are looking to make a sizable investment.
Robin, anything you want to share on that? Because that's kind of an interesting
I was taking
dichotomy to
notes.
me. You have that's kind of an interesting one because we see kind of cause and concern. Those numbers are kind of rising, but at the same time, we see that the creator, right, the person who's building these projects, they're not really regressing backwards. They're not just, so the builder isn't stopping to build. Yet from one perspective, there's still an angle of cause and concern.
Yeah, and I think what's most interesting about what Susan just commented about is that sales cycle is taking a little bit longer because the buyer is having a harder time making a decision. And I think that's the key in all of this in terms of how we manage that. So if we consider the model of VUCA and we look at lack of clarity and unknowns, that's a response where people are, there's my cat's tail. There's a response where people are, they're not sure what to do. And so what they end up doing is they kind of get paralyzed and they're waiting for more information to be able to make a decision. So the opportunity for a salesperson is really to help that person gather that information so that they have clarity, so that they have a sense of predictability, and that will move them forward. And so that needs to be baked in to part of the sales process where people actually are having conversations that are providing that information so that people can get unstuck.
Thank you. Thank you, Susan. Go ahead. I'm Appreciate you
All right.
stopping there.
No, thank you. So if we look at the greater Tampa market, we have seen over the past 3 quarters, so most of the past year, that annual closings have outpaced annual starts. And that's actually a good thing. If you'll notice in 2020 and 2021, that purple color annualized starts were outpacing closings. And what was going on during that time was builders were very heavily focused on a quick move in model for home sales. And what we're seeing now is more of a regression back to traditional sales methodologies, where we're seeing builders now allowing for customization of homes through a to be built sales model. And what, again, we're seeing is that sales or starts, excuse me, are still below closings. And that means we're not currently overbuilding. And we want to continue to monitor this as economic conditions continue to change. If we look at this a little bit deeper and look at this on price points, so this is looking at base price points. Obviously, that affordable market under 500,000 is where we've had most of our starts and closings over the past year, and that's also where starts have lagged closings. If you look, notice at the luxury market, over $1 million, for example, annualized starts have outpaced annualized closings. And one of the things we track at Zonda is the performance of markets, whether it be entry level, mid-tier, which is move up or move down, in luxury markets. Several markets in the greater Tampa area are actually exceeding their normal averages for that luxury market. And we're seeing that right here where those starts are outpacing closings. However, it's not a concern because those $1 million homes take longer to build. And so we would expect to see starts exceeding closings, at least for a quarter or two. When we think about it based on lot sizes, again, lot sizes translate a lot of times to affordability. And we're seeing those smaller lots under 55 feet wide, and that does include townhomes and condos, are where we're seeing the most of our starts and sales. But we've definitely noticed an uptick recently in sort of those mid-price lots as we are attracting a move down buyer, move up buyer. But again, across all of those, just like in the counties, we are seeing that annual closings are outpacing annual starts. And this is by submarket. So you can really dive into the market areas within Tampa and see where we are really having great success with starts and closings. If you'll notice, Hernando, which is one of the smaller markets that we survey in the area, actually did outpace starts versus closings for the last 12 months, as did South Tampa and the urban. So that's going to be your condos. And again, with it being attached product, we're going to expect that to starts to outpace closings. So looking at new home pricing, we ask builders, what are you doing relative to your base pricing? And nationwide, 35% of builders reported they are reporting some level of price decline relative to base home pricing. However, in Florida, 70% of respondents indicated that they had lowered base prices. But, and you'll hear me say that quite often, but we are seeing bright spots. These price increases or price decreases, excuse me, are happening throughout the market, but in communities where we're overperforming sales, we are seeing small price increases. So they might be incremental, $1,000 a month, $500 a month. We are still seeing price increases in high performing communities in Florida and in the Tampa region. But what else is causing those price fluctuations? And really, tariffs are big, and we're worried about what those are going to do to cost of homes. So division presidents overwhelmingly say they are nervous about the impact of tariffs on the cost of a home. And I know this is going to be in flux. I talked about tariffs on several speeches, and by the time I got done talking, it had all changed. I know there was some developments yesterday on the tariff front. So prior to yesterday, we were anticipating about 9% increase on base prices of homes relative to impacts from the tariffs. Also, concerns are nervous about the impact of tariffs on housing demand, which again ties into that affordability and the price of homes. If we look at the Tampa market, average base prices, however, even though builders say they are lowering prices, are up about 1.5% in April by county. And this is compared to 2024. But even though we are early in May, we also want to look and see what's going on this month. Right now, we did see about a 5% decrease between April and May in base pricing, about 5.1% market wide. So we are starting to see the impacts of that price drops market wide. How are builders offsetting these high prices? The concern about base pricing, the concern about affordability, rate buy downs is still the dominant incentive that is offered throughout the country. And in Florida, about all builders were saying they were buying rates down into the 4s and 5s. We did not have anyone that responded saying, hey, we're not buying down interest rates. But we've got a problem. Incentives, while they are critical, incentives have lost their effectiveness. So I bet somebody in the audience has had a buyer come in and say, yes, I know you're going to buy my rate down, but what else can you give me? And that's really the what else? What else can buyers expect from home builders? This incentives are great. They're differentiating from the resale market, but they are also very expensive. Right now, we estimated average is about 4% of pricing, with different builders offering different rates and having different financing structures to achieve those buy down rates. What we're seeing mainly are incentives and price cuts, but those incentives and those price cuts aren't created equal. Nationwide, homes are down in every market. But 30, and as we mentioned, 35% of builders responded lowering prices in April. If we look at this greater Sarasota, Tampa markets, we see about 6% decrease or 11.5% decrease. But you've got other markets in Florida that are significantly underperforming. For example, Cape Coral down almost 17%. In the greater Tampa market, we're seeing incentives for to-be-built homes and quick move-in homes tracked very closely, about $21,000 to $22,000 respectively. This is, however, about double what we're seeing throughout the Southeast. So in the Carolinas, Georgia, Tennessee, we're seeing about $9,000 to $10,000 for each type of incentive, and here it's about double. Now, this does also not include the over-the-top incentives, if you will, the free pools, the free cages, the free spas, things like that. They were also starting to see track into the market to really drive those buyers, pull them in, and get their attention. If we look at this by builder, most markets are have higher quick move-in incentives than they do to-be-built incentives. And you'll see Sam Rogers Home only is offering quick move-in incentives, about $140,000. This trails off as we get to smaller homes, but with these nationals and large regional builders, we're seeing, a 20,000 plus in those incentives. One of the questions we also ask is, what is the impact of the resale market? Because we know that the new home construction is competing regularly with the resale market, or at least has historically. Since COVID, the resale market is posing little to very little competition to the new home industry. And as I mentioned, that's because new homes have the opportunity to offer those things that draw buyers in, the incentives, the quick move-ins, the not needing to redo a home. So we have seen nationwide that about 50% of markets, 58%, excuse me, say there's very little to no competition from resales. And 26% say there's a little bit of competition. But in Florida, 80% of respondents said there's no competition from resales. So we know that new homes are going to be the way to tackle what we're going to talk about in a moment with that hard economic data. If we look nationwide, there's a mix of buyers, sellers, and balanced markets. And Florida, right now, depending on the market area, is really going to be a mix of buyers and balanced markets. We are seeing that inventory tick up, but that inventory is not necessarily where buyers want to be, does not necessarily offer the features, included features, interior features, exterior features that buyers want, or it may not offer the floor plan and livability that new home construction can offer buyers.
So let me just jump in. I want to tackle a behavior strategy here for just a moment, and tap into Robin for a second. So I think that's fascinating. You hit a really unique slide there where you said, I'm not sure if it was in your slide, but you mentioned it, 80% of the new construction market does not see in Florida, or at least in our geographical area, we are not seeing resale as really competition.
That's
which I
right.
think is fascinating because there's two unique. There's again, we're back to another dichotomy. We are seeing incentives. We're seeing some other slides here where numbers are coming down, prices are coming down. So the mindset, Robin, I would think of the person who's at the model center is we need more price cuts, need more price cuts, need more incentives to compete because the person across the street's offering that. Yet one of the big markets out there, which is resale, the mentality of the consumer is 80% of me, if I'm going to make a buying decision, is going to construction. What are your thoughts about that?
It's really interesting. So a couple of things. When what Susan mentioned in terms of new building is what's driving people is they don't want to have to go into a resale home and do all of the new modeling, and they want to start with what they want. They want all the additional features. They want the floor plan that they want. That's a huge opportunity for salespeople in the new construction market to really tap into what does the buyer want, and that's how they're making the decision. So the mindset of the salesperson is coming from look at the customization that we're able to offer. And if we can tap into what their wants are and what their needs are and form a connection based on that, then yeah, you don't end up having the competition with the resale. And the more that you can do that, the more that you can connect with what people's wants are, what's driving them, the easier it's going to be to convert them. But if we have the mindset of,
It would,
oh, this is what I'm competing with, then we kind of take that
right.
mindset and we put it on the buyer. And so if we can shift our mindset that that isn't what's happening, and then we can illuminate that for the buyer, puts us in a better position.
Yeah, it seems like the buyer is coming in 80%. This may be a unique perspective from a mindset standpoint, but if the buyer's coming in and if they've been looking at existing homes and they're disgruntled about what they're seeing in existing homes, now they're coming into a new construction development, 80% of that mindset is already shifted towards this is the market I want to play in. What challenges do you see that sales executive or sales agent in a model center dealing with? If I'm coming in a little bit apprehensive that, for 500,000, this is what I'm getting in existing. Now I'm hoping to find, something unique, a pearl in the oyster, so to speak, as I'm coming in a new construction. Isn't my mindset a little bit depleted that in the existing market, I'm already a bit discouraged from what I've seen?
Yeah, but that's beautiful, right? Because if you've
Yeah,
ever been in a
it's a setup
position where you're
question.
like, yeah, where you're like discouraged, like not, I can't get what I want. Like I can't believe this that it's like this. And then all of a sudden you walk in and it's like, oh no, we can actually meet your needs and position that. Then it becomes an opportunity. But when we're dealing with people, if they're walking in with that mindset, we have to be able to shift that so that they see the opportunity. What tends to happen is people come in with kind of a negative mindset and they're depleted and they're discouraged. And we don't realize that that kind of negativity then ends up influencing us. And so instead of us being like, I can't wait to share this information with you, we kind of get sucked into it as the seller. And if we can position ourselves that we're bringing them to the space that we're in to a different mindset, then we can convert it. But we have to be aware they're walking into that. And our mindset, the seller mindset, has to be focused on this is what the opportunity is. This is a really exciting, this is an exciting time. And if they speak to it, like I'm sure if you're looking at, the existing home in the market, you're not going to see this, you're not going to see that. And you start pointing out those aspects for them. So they're like, yeah, that's exactly the feeling. That's what it's been like. And then you're like, yeah, but we've got something better, right? We've got something to actually meet your needs. We can customize it. We can do this. We can do that. Now you're bringing them along into a very different journey as opposed to just having them get stuck in that space. Because if they come in with that space of like,
Thank you. That was perfect.
okay, good, I'll leave it at that.
No, no, keep going. No, that's fine. I think you nailed it, but was there something else you wanted to add?
I just want to say if they come in and they're discouraged and we're like, oh, it's one of those people, right? Like and I'll go into a little bit about how that ends up impacting us. I call it splat, but it's like they put all that negativity on us, then we actually miss the beauty of it. We miss the opportunity to present to them what that opportunity is.
Thank
Okay.
you. Susan, back to you. Thank you.
So one of the things we talked about, let me go back to the slide, Resale inventory is up in the market. Tampa as a whole, 15.5, Sarasota, 20.4. But the market has been so depressed and so below average in terms of resales over the past several years that going up is where it needs to be. Now, we don't track these resale homes. Maybe they are fixer-uppers that have been damaged by the back-to-back storms. Maybe they are in locations where they can't get insurance. We're not looking at that level of detail, but we're looking at the overall volume. So in 2024, resale listings declined by almost half. And part of that is the locked-in effect of low interest rates, because we do expect interest rates to stay in the 6s and 7s over the next year. And right now we have a large population of folks in Florida and throughout the country that have interest rates in 2 to 3% ranges. I like to point out I'm one of those folks. I have a 2% interest rate, and my home would be a first move up type home, and I'm not going anywhere. So we've really repressed the market by folks being locked into their low interest rates. Over that same time, we've seen base prices increase. Median sales prices for these resale homes increase. They've finally started to table off and level off over the past year or so, and that's a good thing for supporting affordability as well. Even as resale listings have increased in the market, they still remain below the pre-COVID average of 32,000 listings. Now, that's on average. They have ticked up in March to more than 35,000 market-wide. But it's not the media storm would have you believe that every house in the market is available for sale. We are not seeing that level of panic selling in the market. If we look at listings by county, you'll notice that average annual listings are up in every county in the market area, with most at or above that normal year of 2019. But they're not significantly up in a lot of these markets. They're just starting to tick up. And if you look, for example, at Hillsborough County, it's well below the historic performance of the market, even with 6,300 listings. Thinking about those listings and how long it's taking them to sell, we are still seeing relatively healthy markets, 4 to 7 months. Generally we're looking 4 to 6 months of supply in a market. And every market is up from that, less than 1 we saw during the pandemic and coming out of that. But we're still sort of okay in that 4 to 7 months of supply. We want to watch it. We want to continue tracking it. But we can also sort of take it with a little bit of grain of salt, knowing that resales aren't necessarily the biggest competition that the media would have us to believe. So my sort of last segment I want to really focus on is the consumer sentiment related to economic development or economic data. If resales aren't the problem with the new home market and with competition, what's holding those consumers back? Prior to the past 3 to 4 months, our historic response has always been solidly around interest rates and affordability. While that is still an issue today, it is that general consumer confidence that's holding buyers back. It's followed very closely by the economic and stock market fears that are spooking consumers. Why is this a concern? Well, only about 20% of folks are invested in the stock market, but the performance of the stock market and publicly traded companies really impacts our opinions of what our job security and safety is going to be over the coming years. And folks aren't going to make the decision to buy a home if they're unsure about their future and their future employment. So when we look at the market and thinking about employment and that hard data as opposed to the soft data, the consumer sentiment, we see that we still have and we are still forecasting employment growth in the market. We are expecting jobs to continue to be added. We are expecting unemployment rates to remain around 4%. So we're still seeing a healthy employment market. We're also seeing a diversified employment market. Economic growth in the region is positive amongst most of the top sectors, with government and professional and business services sort of losing jobs over the last 12 months. Now, we do expect there's going to be some trickle-down effects depending on what happens or continues to happen with the DOGE-related cuts to government services. But this really showcases what a diverse economy the Tampa area is and really calls to need that affordability. So we need homes that can be attainable for all these different employment sectors. With the hard data, we are still seeing economic impacts to median income. The median income in the market is continued to grow. About it decreased an average of 3.8% increase. That's a typo on my part. And we expect that to continue to increase over the next 5 years. That bodes well for housing. We are also seeing that household growth, so household formation, is going to be strong over the next 5 years. And one of the things that we're seeing in the Tampa market and in Florida, Central Florida, really that I-4 corridor, is a lot of younger folks locating to the market, either for employment opportunities or because they have family members in the area. And they're really looking for that village to help with their life, raising kids, raising grandkids, and taking that next step in their career. This has resulted in population growth. Now, we are expecting population growth to cool between 2026 and 2029. However, it's still going to remain positive. The market is not going to lose people. So with household formation, with population growth, with economic growth, all the hard data is supportive of the housing market. We need to conquer the fears of the buyer and really work inside those consumer confidence thresholds. So sort of some final thoughts and forecasts. You heard me mention earlier caution and care. Caution with your buyers, give them extra care, give them extra attention. The general market conditions, that hard data, it remains favorable. We still see demand in the market as well. But affordability, we've talked about that several times. Affordability is still a big driver in the market, falling slightly behind consumer sentiment, but it's still there. Interest rates are going to remain in the 6s and 7s, we anticipate, over the next year. We also have affordability issues that are impacted in Florida by increase in property insurance, by property taxes, by CDDs, by HOA fees. So we're really seeing all those things weigh on affordability in the market. Price reductions and price increases, it varies by market, it varies by builder, it varies by community, it can even vary by floor plan. And we're really seeing that attention to detail and that care in making sure we're meeting the demands of the buyer. We see more supply and more competition. As I mentioned, sort of that I-4 corridor is really booming. We're seeing a lot of folks that want to stay in Tampa, stay in Sarasota, but they don't want to be so close to the ocean for the hurricanes and the storms. So they're moving inland, but staying generally in the market. We're also seeing an uptick in build to rent competition. We're seeing new builders that are sort of moving from other markets in Florida to the Tampa I-4 corridor. And we're seeing that resale inventory increasing. We didn't really talk a lot about it today, but the new administration obviously has policies that have the potential to impact not only the wider economy, but also the housing industry. And that really relates to those tariffs that we talked about, adding an estimated 8 to 9% to the base pricing of a home, even as we're reducing those prices as a result of trying to draw in competition. Higher costs, we talked about the higher costs to the homeowner, but we're also seeing higher costs on the builder side of things. It's expensive to have incentives. It's expensive to buy land. It's expensive to hold land. And those tariffs are going to make it more expensive to build a home. What does this all mean? We're expecting some margin compression. We're expecting builders to continue to resolve and reassess their standings for the next year. We are seeing in the builder reports some modifications in what they expect for their goals for the year. However, in Florida, again, we expect the builders are responding. They say we're still going to start homes. And with that, Nathaniel, I'll turn it over to you.
Thank you. That was really wonderful. Appreciate that so much, Susan. That was great information. A lot to unpack there, especially in the area of consumer sentiment. So Robin, we're gonna bounce over to you and have you maybe share your slides now, if that would work for you. But as we're Susan, if you could maybe certainly feel free to chime in. Robin may have some questions for you, just a few things here that as we're recapping, we're seeing that household formations is still very much so on the rise. So as we talk about density in our markets, we talk about increased household formations, And maybe you could just take a moment to explain household formations. What is the definition of that metric in terms of household formations?
So let me actually add one thing before I talk about that. One of the things with the households and household formation that we're seeing is that willingness to consider other housing types. So Tampa, Florida have generally been that older household. Maybe it's a second home, so not their primary residence. Maybe it is their primary residence, and they go back to the Northeast, for example, for their second home. But what we are seeing is we're seeing more full-time residents. We're seeing younger households. So we're seeing folks that maybe want something besides a single story floor plan or a primary suite on the main. So we're seeing that they're also willing to consider the smaller footprints, the townhomes, and the, again, affordability. So the households, are changing and shifting from a demographic perspective. By and far, the retiree, the move down buyer will continue to be the dominant household composition, but those other groups are increasing, and that is, going to really speak to the need to diversify the housing stock as well.
Yeah, that's a really great point. And I think, Robin, there's some interesting information here as we talk about the crisis of affordability. We talk about VUCA, we talk about uncertainty, complex situations, ambiguity. Affordability seems to still be the challenge, right? People are coming into the model center, and although it's perfect, it's beautiful, it's where they want to be, they've kind of adapted out of the resale environment. Now they're still struggling with the conception of affordability, which I would imagine is still a threat response for the person that's having that individual coming into their model center.
Yeah, I think the consumer sentiment and consumer confidence and decisions point, right, is being able to manage the fear of the buyer. If they're worried they're going to lose their job, they're not going to be able to afford it long term, that's going to impact their decision. So how do you get them to kind of quell that fear? And if you want, I can dive right into how do you manage that fear?
Let's do that. Yeah, I think now we want to be able to take some of this, very rich data, and what we've kind of come down to is the consumer need is there, the consumer want is there, correct, Susan? It's there. We can see that the competition, a significant portion has been eliminated by resale. So for me, if I'm good about the fact that I've eliminated a significant portion of competition out of the marketplace, it seems like the obstacle now is the fear and the threat response associated with affordability.
Yeah.
So yeah, Robin, why don't you jump in on that?
So can you see my slides?
Yes, we can.
So this is the VUCA model, right? Stands for volatility, uncertainty, complexity, and ambiguity. And you alluded to it, Nathaniel. There's what's called a threat response. So anytime that we experience fear, um, if things are rapidly changing, if we're not sure what's going to happen, if we feel overwhelmed, if we don't have clarity, that's going to activate a threat response. And I just want to go into a little bit about the science in terms of what's happening in the body, because the more you understand that, the more you can actually shift people out of it. So within the brain, in a very simplified way, the brain is wired to actually avoid threats and seek rewards. And so when we're under a threat response, I have a friend that's is a government worker. So she's on a complete threat response that she's going to end up losing her job. That's just a continual thing. So she's already thinking, she's in a home. She's already thinking, I'm not going to be able to stay here. I'm not going to be able to afford it. So when people are on a threat response, it kicks in very fast. It's quite intense. It's very strong. It lasts a long time. And that ends up releasing cortisol. The reason why that's important is it creates a metabolic cascade within the body. So people get tensed, their heart rate goes up, they start breathing quicker, their digestion shuts down. And what's important for that is for everybody in working with people that are under a threat response. Number one, you got to be aware of if you're under a threat response because you're going to have a hard time getting somebody else out of it if you're in it. But what ends up happening when we're in the threat response in terms of how the brain operates is we get very distracted, we become anxious, we end up having very intense emotional reactions for certain things that, we'd be like, whatever, just like brush it off. We no longer have that ability. The other thing that's interesting is once you're in a threat response, you start seeing threat responses everywhere, even if they're not. And this is why when you start looking at the news and you start looking at some of the data, people then start looking at all of that as bad because now they're under a threat response, so they see more of it. They start seeing people as hostile, which is pretty interesting. If you present somebody with neutral information, they perceive it as negative. They start questioning your motivations, they start questioning your intentions, and that doesn't happen under a threat response. Their memory is reduced, their performance is reduced, their overall intelligence is reduced, and they end up with a very narrow perspective. So let's put that in the context of somebody comes in for a new home build. They're already under a threat response. They're completely triggered. Who knows what they just saw on the news? There's a sense of, Susan had talked about the tariffs. Everybody is concerned of what's the impact of that going to be. So now they're not just experiencing a quick threat response. They're kind of in this continual state. And how that ends up impacting the body is it impacts neuromuscular, it impacts their heart, it impacts hormonal, and then even their respiratory. What most people don't realize is once you have these physiological changes, it changes the neurochemistry within the body. So our body, our energy within the body is all neurochemical, right? We send messages through the brain, and those are all electromagnetic. And that energy, most people don't realize, is each individual person has a 3-foot electromagnetic field. And if you walk into somebody else's electromagnetic field and they're very negative, they're very triggered, they're very cynical, that has an impact. And so everybody ends up with their own emotional cocktail. And in that emotional cocktail, what we don't realize is that it creates what's called emotional contagion. So if somebody has a negative vibe and you are in that electromagnetic field, that information is getting splat on you, all that energy. You might not realize it. You might think it's your own, but it's actually coming at you. What's really interesting, if you look at splat, and I ask the question, what do you think is more contagious, positive or negative energy? Most of the people will actually say negative, and it's the opposite. Positive energy is far more influential. So if you have a buyer that's walking in and they're splatting on you, you actually have the opportunity to curtail that and actually influence them with some of the data that Susan presented, which I think is brilliant, so that they have a new perspective. So when we look at VUCA and we've got volatility, uncertainty, complexity, and ambiguity, how do you manage those interactions? How do you actually manage that dynamic so that these people aren't splatting on you and you're actually influencing them in a positive way? So in order to manage volatility, what we want to look at is how to stay grounded with data and have empathy. In order to manage uncertainty, we want to build trust, want to be transparent and communicate. Helping people deal with complexity is be able to break things down for people, simplify it. And then dealing with ambiguity is about staying curious and asking clarifying questions. If you look at how do you become VUCA ready, you can actually take the VUCA model and flip it and create a VUCA readiness model. So instead of volatility, you have vision. Instead of uncertainty, you have understanding. Instead of complexity, you have clarity. And instead of ambiguity, you have agility. So what that means for you as a salesperson is how do you shift the conversations that you're having with people so that you can shift their threat response? That's ultimately what you want to be doing. You have to manage your own and make sure you're not in your own threat response. But if you come from these conversations from this perspective, it will shift the dynamic. So when we talk about the vision, everything is about inspiring a shared vision about what's possible and what's meaningful. And I want you to consider that for a moment. If people are able to customize what they really want, and you have an opportunity to have a conversation with people about what's important to them and what's meaningful for them, that actually shifts them out of a threat response into a reward response. And when they're in a reward response, they're able to see opportunities better, they're able to problem solve better, and it enhances the connection that you have with people. So for me as a coach, I spend my entire time helping people change behavior. This is what I end up doing. So the first question I'm always asking people is, what are you trying to create? What's the goal? What are you wanting to achieve? So when you're able to have those types of conversations out of the gate, it enhances the connection, but it gets them thinking about what's possible and what's important to them. The second thing we can do for VUCA readiness is understanding is connect emotionally with their concerns and fears. There is a tendency, if somebody is worried about the stock market, if they're worried about their job security, if they're worried about their the tariffs and the economic situation and interest rates, there's almost a tendency to say to people like, oh no, don't worry about that, or that's not a big deal, or that'll all work out. And it's almost like we end up dismissing it. That is going to completely fracture the relationship that you have with them because they're not going to see you as being honest and transparent. So what you actually want to do is go into what their fears are. And so you could ask I mean, if you think about the hurricanes and what we experienced last year, that's a huge factor in terms of how people are making decisions on the housing market. And a new home construction has much better options for fortifying a home and withstanding some of those elements. And what we tend to do is, well, that was a very unpleasant situation to talk about the hurricanes. And so we don't really want to bring it up. But we actually do want to bring it up. We actually want to say, did you have concerns around hurricanes? Do you have concerns about the protection of your home? Susan said people are moving inland. This is a big thing. I know, uh, having been in the Tampa area for quite some time, we always had these near misses with hurricanes. So when the hurricanes would come and it was a near miss, we would forget about it. That's not what happened last year. This is still top of mind for people. So we want to go into what's the fears they have about hurricanes, what's the fears they have economically in the stock market. Let them voice those fears. It's not your job to fix it. You don't have to have the best answer. You just need to ask the question so that they're able to articulate that fear. The minute that they're able to articulate that fear, it actually drops that threat response because and you'll see people visibly exhale just when they start talking about it, like, oh, and you would think talking about the fears is going to exacerbate it. It does not. It actually releases it. So your job now is to have them thinking about what's possible, what's important to them, and then you want to shift it to what are the actual concerns. And you want to have those types of conversations because that helps with the connection, that creates an understanding. And then that person feels like, oh, you totally get me. Then when we shift from confusion to clarity or complexity to clarity, we want to guide buyers through the steps, set the expectations, and provide information. We don't want to overwhelm them with the data, but we do want to kind of break things down into small steps so that they're able to process that. And I don't know if you've experienced this where you've met with people and you've given them all the information and then they start asking questions on what you just told them. And you're thinking to yourself, were you not listening to me? It's because under a threat response, they can't process the information. So we actually have to go slower and we have to give them bite-sized information and make sure that they're processing the information so that there is that clarity. That clarity is what's actually going to give them confidence. All of these sentiments that Susan talked about in terms of consumer confidence are all related to the fact that we don't know what to expect. And so give them the expectations that you could, at least on your process, maybe not necessarily on the market, but that gives them a sense of control. And then agility is managing your own fears and concerns while connecting with people. We tend to have assumptions when we meet with people. And if you're constantly meeting with people that are depleted and despondent and they're like, what's the point? We kind of go in like, yeah, that's okay. I got another one of these people. We want to keep that at bay and realize that I have a whole new strategy on how to actually connect with people. And it might be that in one conversation, they're super excited about the possibility. And then you see them get totally freaked out about, well, what if I end up losing my job? And then you got to shift them back out of it. That requires you to be highly agile in managing how it's impacting the splat that they're putting on you, and then shifting them back out of that. So basically, the 4 action steps that you can take is focus on the vision, what it is they're wanting to build, why they're moving, what they're excited about. I love hearing about, the younger folks. I have friends that they're, they got their kids, their grandkids have a house, the step-in-laws, the father-in-law, they're all like in the same neighborhood. There's people that are actually creating that new foundation. And so get them talking about why they're excited about the neighborhood, why the layout or the floor plan is exciting to them. strengthen those relationships through empathy, create data and information that's crystal clear, and then ultimately be adaptive.
So I have a question for you with regards to incentives.
Yes?
Would you say, and we're going to go to rewards and threats for just a moment. Somebody comes in, there's an affordability concern. We talk about the emotional contagion, right? That somebody's coming in if they're already somewhat apprehensive, maybe reluctant, maybe they're defensive. So they're kind of splatting a little bit of negativity there. Uh, and if they're leading with, so what are your incentives here? What are you giving away? What's your price? If they're leading with price and incentives, can you help describe that? Because some people may say, well, here's our incentives. You're going to get a great deal on this home, and our incentives are X. And people might be thinking they're leading with a reward response. Any thoughts on that? It would seem to me almost the
So
opposite.
everybody likes to get a deal, right? Everybody likes to feel like they got a really good deal and that bolsters their confidence. And what's happening in terms of the brain is that's called a dopamine hit. It's kind of like for me buying a new pair of shoes, I feel really good. I get a dopamine hit. And so people are walking in with give me a dopamine hit. And so they're thinking if I get the incentive, if I get the price reduction, if I get all of the things I want, then I'll feel better because I'll get a dopamine hit. And that is true. That's what will actually happen. But a dopamine hit is very momentary. So people go in with that's what they want. But what ultimately creates the sustainability is that relationship. If they feel like they can trust you, it doesn't, and you can think about your own buying patterns. We don't always buy the top of the line. There's a lot of times, even for me, that I stretched myself because I really wanted something. And so I might not have gotten the best deal, but I was able to make it happen. So we can create better than a dopamine hit and multiple dopamines hit through different chemicals, which is the vision and the connection. And people end up feeling good about their purchase. But if we just give them a quick dopamine hit, that's all it is. It's just a quick hit. We want to get beyond that.
Thank you. That was terrific. So we are now at the end of the hour. We want to respect everybody's time. If you have any questions, please feel free to put them into the chat box. I really want to thank, Susan for such great, rich data that you presented to us here, and of course, thank you, Dr. Robin Labich, for giving us some of those strategies related to behaviors. And this is being recorded, so it'll go back out to all of you. And by all means, I know they can reach out to you, Susan, if anybody has any questions, and certainly look up Surpass Your Goals and Dr. Robin Lavich. I highly recommend all of you, do a coaching session with Robin. She's really terrific. And from a sales strategy standpoint, in this particular environment where we're dealing with so much uncertainty and tariffs and some of the variables we're looking at, leading with the right connections is what's important. So thank you to the both of you.
Can I just
Susan
mention
went ahead and put
something,
her information.
Nathaniel?
Yep,
Yeah,
please
I
do.
just put
Yes.
my email, and so did Susan. I created a VUCA readiness checklist, so that you can prepare yourself for some of these conversations and ask yourself what are some of the things that people are dealing with, and then a little checklist to make sure that you're in the right mindset. If you would like that checklist, I put my email in. Just give me an email, and I'm happy to send that out to you.
That's great. Hope everybody caught that. Well, very good. Let's see, Power Packs.
You.
Okay, great. Getting a lot of thank yous here. So appreciate everybody. No questions from what I can see. Thank you to the SMC board. Thank you to, of course, Lauren Morgan and her team for helping us put this all together. We are now at 1 minute to 11. I don't see any questions in the box. Lauren, you want to close us out?
Yeah,
Anything you want
just
to
wanted
say?
to thank the team, thank our panelists, and of course our annual sponsors, especially LMCU, Lennar, and Mattamy Homes. They help subsidize our programs and allow us to put on things like this. So thank you all. Give me a couple hours for this recording to be finalized, and we'll get that out to everybody. But thanks again. Appreciate you all.
Thank you. Have a wonderful week, everybody. Thank you
And
to our
if
panelists.